Welcome back to First News. I'm Nate Fluharty, and it's time for us to take a look at our midweek business headlines, including the Federal Reserve heavily considering an interest rate cut today. We have been watching that for a long time. It would actually be their first one in 4 years. And Starbucks sales fall as customers may be getting fed up with that pricey coffee. All right, let's ground those coffee beans and head to the NASDAQ. Maribel Labor joins us with these stories and a whole lot more. Good Wednesday morning, Maribel.
Hey, good morning, Nate. Listen, there's confidence among market and analysts and economists that the first interest rate cut in more than 4 years could happen in September. All eyes will be on Fed Reserve Chair Jerome Powell for any signals later today. Powell has stated that the Fed wants the annual inflation rate at 2% before any cuts kick in. We're getting closer. Two key inflation gauges last month related to consumer spending and prices came back between 2.5% and 3% year over year. The Fed's former director of monetary affairs tells CNBC he expects Powell to signal a September cut but stay quiet on what's to follow, adding that while inflation is easing slightly, the economy doesn't yet support a detailed roadmap of rate cuts. The Justice Department has filed a civil lawsuit against Norfolk Southern, alleging the rail company knowingly created large delays for Amtrak passengers traveling between New York and New Orleans. Federal law requires Norfolk Southern freight trains to allow Amtrak passenger trains to proceed first, but the DOJ says Norfolk Southern regularly failed to do so, leading to widespread delays that negatively affect Amtrak's financial performance and passenger experience. Norfolk Southern denies the suit's claims, saying it has complied with the law, along with working with Amtrak and state officials to expand and improve passenger service. Another mixed close Tuesday with the Dow, NASDAQ both moving around 200 points, but in the opposite direction. The Dow gained 203, NASDAQ lost 222, and the S&P 500 ticked down 27 points. Local stocks that move included shares of Weyerhaeuser, which added 1.5% yesterday, and Oil States International, which notched just under 3%. The Magnificent Seven big-name tech stocks reflected the mixed turbulence of the major indices, with Amazon, Microsoft, and Meta all down less than 1%. Alphabet and Apple rose about the same, within 1%. Notable losses were Tesla giving up 4%, Nvidia, which also shed over 7% at the close. Along with the Fed chair's highly anticipated post-meeting statement later today, more corporate earnings are expected to roll in from Boeing, Etsy, Carvana, and more. Right now, looks like futures up. Dow futures up about 147 points. NASDAQ futures up 282. Starbucks is unveiling new strategies to woo back customers. The company lost 3% in global sales between April and June, 6% in North American markets, in stores open more than a year. Now, to bounce back, Starbucks is turning to the value meal approach. Its new pairings menu combines a drink and breakfast item for $6 or less. And new technology features faster blenders and dispensers, so baristas don't have to go get ingredients from a cooler, meaning less wait time for cold drinks like iced coffees or frappuccinos. Starbucks says the new changes appear to be taking hold, reporting a recent surge in multi-item orders. Okay, Lululemon is pulling its newest leggings off the market after finding itself the butt of endless online jokes and customer backlash. The newly released $98 breeze-through leggings, they're being bombarded with negative reviews after buyers complained about its V-shaped design in the back. A wave of users took to social media saying the V-shape looks like a, quote, whale tail or a giant arrow pointing right to the, well, you know. The product snafu is Lululemon's latest setback, having already suffered a 50% stock decline so far this year. The leggings debacle just puts it even further behind.